The New York Stock Exchange, universally known by its acronym NYSE and nicknamed the Big Board, is the world's largest stock exchange by market capitalization and the definitive symbol of American financial market infrastructure. Founded through the Buttonwood Agreement of 1792, the NYSE has operated through every major financial crisis and regulatory overhaul in history. The exchange traces its institutional origin to May 17, 1792, when 24 stockbrokers signed the Buttonwood Agreement outside 68 Wall Street. This brief document established two critical principles: exclusivity, where members traded only with each other, and a fixed minimum commission rate of 1/4% on all transactions. This fixed commission structure remained a core feature for 183 years until the SEC abolished it on May 1, 1975, an event known as May Day. This forced the industry to compete on price for the first time, fundamentally transforming the economics of the brokerage industry and democratizing equity investing. The defining institutional characteristic of the NYSE is its auction market structure, an order-driven system where buyers and sellers interact directly. This distinguishes it from NASDAQ's dealer market, where competing market makers quote prices from their own inventories, a concept frequently tested on the Series 7 examination. In this auction mechanism, buy and sell orders are matched based on price and time priority. The highest bid is matched against the lowest ask, and among orders at the same price, the earliest submission receives priority. Price discovery emerges from the aggregate of all investor orders, reflecting genuine supply and demand. In 2008, the specialist system transitioned to the designated market maker model. DMMs are responsible for maintaining a fair and orderly market. They have affirmative obligations to maintain continuous two-sided quotations, facilitate opening and closing auctions, and commit their own capital to stabilize trading during imbalances. NYSE operates as a hybrid market, combining electronic order routing with the physical trading floor at 11 Wall Street. While the vast majority of trades execute fully electronically through the Mahwah data center, the physical floor remains vital for the opening and closing auctions that determine official daily prices. Listing on the NYSE is a significant milestone, requiring companies to meet stringent standards. Financial tests include minimum global market capitalization, shareholders' equity, and net income history. Additionally, companies must maintain a minimum public float, share price, and average monthly trading volume to ensure market liquidity. Governance standards require a majority independent board and audit committees composed entirely of independent directors. As a registered national securities exchange under Section 6 of the 1934 Act, the NYSE is a self-regulatory organization, with all rules and operations subject to the direct oversight and approval of the SEC. The NYSE's ownership has evolved from a member-owned organization to a subsidiary of the Intercontinental Exchange. ICE, a publicly traded company, acquired the NYSE in 2013 and today operates it alongside other specialized venues. Remarkably, ICE itself is listed on the New York Stock Exchange under the ticker symbol ICE. For your examinations, key points to retain include the distinction between the NYSE auction market and the NASDAQ dealer market. Remember the Buttonwood Agreement's role in founding the exchange and the affirmative obligations of the designated market maker in maintaining liquidity and stability during the trading day. Finally, understand the regulatory framework provided by the SEC under the 1934 Act and the significance of May Day 1975 in ending fixed commissions. Mastery of these structural and historical mechanics is essential for any financial professional preparing for success on their licensing exams and in their career.